Howdy there, folks. Welcome into today's video. Hope everybody's doing great. As always, a lot to discuss in today's video. A lot of things I got to show you, a lot of stocks to talk about, a lot of things going on in the markets in general, and some very important things I want to show you in today's video. Hope you enjoyed it. As always, appreciate everybody that's subscribed to the channel as always. Okay, first to start out here, Target stock. So Target, you might have seen it, it's down 13% here today, and you know, it was interesting because I saw the stock down big, and first thing I thought was, oh man, I should probably buy some Target shares. And basically some information got released in that was, to me, it was shocking, completely shocking, okay? So the company missed massively on operating margins. They had to basically mark items also down more than expected, but that wasn't the shocking part. The shocking part was they basically said they're seeing a much higher level of shoplifting, which jumped about 50% year over year. And, you know, I looked more into the situation and whatnot, and basically they lost like $400 million due to shoplifting. $400 million. And I did that on an annual basis. That's like $1.6 billion if they keep losing $400 million. And that to me was just like shocking that it's that bad in terms of the whole shoplifting situation. And it's crazy. You know, I went into a Nike store. This was like 2 or 3 weeks ago in Vegas. And, you know, look to my right as soon as you go in the store, and there's a police officer there, you know, all geared up and everything. And basically they hire off-duty cops just to sit in the store because shoplifting's got that out of control. My wife said, you know, basically what they'll do, they'll just go in and just steal racks and just walk out with them. Like it's an interesting time. That's all I'll say about that. But it's so, you know, you don't usually think about it being this bad where it actually is destroying companies' earnings. And the fact is, if Target loses $1.6 billion due to shoplifting, that destroys their EPS, that destroys their profitability on that company. That's incredible, absolutely incredible. Now, you might think the beneficiary of this would be Amazon, and naturally it is, right? Because they don't have to deal with people coming into their stores, obviously. They do own Whole Foods, but it's not like Amazon has some massive stores like obviously Target does, okay? And the one thing you could think about with Amazon is packages being stolen, obviously, and that's definitely an issue around Christmas time. But the thing that's interesting now is a lot of people are putting these very, very high depth, or very, very, let's call it high definition cameras around their homes now at this point in time, obviously, and the Ring cameras and those sorts of things. So, you know, now the issue is these cameras are getting so good and people are putting them all over their homes that you can see license plates and things like that. So in terms of that, that's always an issue of packages being stolen, things like that. But sometimes that also could fall on like UPS or FedEx if they're the ones that are delivering that specific package. Okay, insane stuff nonetheless. Okay, and I couldn't buy Target stocks today because I'm like, the earnings were so bad. I'm like, I gotta wait on that one. This came out today. I don't know if you guys saw this. The Binance CEO, which is the last massive kind of, you know, exchange in the space, right? They basically said, you know, crypto will be fine, and I think if anything, this scares people more, to be honest, because that's what we heard time and time again. And everybody says, oh, everything's going to be fine, and then next thing you know, things go belly up, right? And he basically talked about that, you know, business was supposedly performing as usual. And the short term, there'll be a lot of pain, but long term, it's accelerating the efforts we're making in the industry healthier, he says. He says they saw a slight increase in withdrawals. Of course, none of this can be confirmed. No, you know, we can't confirm any of this. You say there's a slight increase in withdrawals. Like, we don't know. They could be 3%, 5%, 1%, 20%, 30%. You know, no one can see anything, unfortunately. And, you know, I don't know, man. If anything, it just feels like it almost scares people more than anything. I don't know if you guys saw this here today. Biden administration warns of historically large increase in student loan defaults without debt forgiveness. Yeah, I mean, you know, why such a huge concern over this? It almost feels like, geez, are we that worried about what's potentially going to happen with the economy that we like got to get this done now? Because there's going to be massive defaults. That's interesting, I thought, okay? Now, retail wreck today, okay? Sold everything off massively. It was obviously the chef took the cake after the dumpster fire of an earnings, and I'll talk about that one in just a moment. Real down 13%, Fubo down 12%, Skills down 10%, Hood down 8%. Ape down 7%, Wish down huge. I mean, all the retail related plays just got absolutely nailed today, including Tesla. We'll talk about Tesla a little later on in this video as well. I want to share some thoughts there. But it felt like such a capitulation type day out there, at least from the retail side of just selling, just selling in mass, okay? So the chef, let's talk about the chef, okay? As a long-term investor in the stock market, we have a few very important things to answer before we ever invest in the stock. What do we expect the company's future revenues to go to, net income? Are we paying an undervalued valuation? And is this stock a better deal versus buying another stock? I have found the ultimate service here that can answer many of those questions and help out in a massive way. And it's called Ticker Buddy. I want to show you 3 very important things here. And through my pinned comment down there, I got them to give you a free 7-day trial of this product. It is epic, okay? So first thing I want to show you is analyst estimates. So most services only show you basically the current year as far as the estimates for revenue. But through Ticker Buddy, you can actually see several years out as far as revenue growth goes, EBITDA, EPS, free cash flow, all those sorts of things. Check out this valuation calculator. So let's say in 2026, I thought Meta should be trading at a 25 P. That sounds about fair, right? This shows me that it should be trading at about $284.55 based upon the calculator. If I say a 20 PE, then we're at about 227.64. Check out the stock comparison here. As we know, we all have a finite amount of money to put in the market, and we got to put in the best opportunities we see. So let's say you're looking into 3 different stocks. You got Meta, you got Google, you got Amazon. You can compare them all extremely easily, all next to each other. So do this for your stocks, guys. This is absolutely amazing. Take advantage of it. It is pinned comment down there. And like I said, it's a free 7-day trial. And then if you want to stay signed up for the service after that, it's a very inexpensive price, less than $20 a month, which for the amount of data they're giving you, it's worth way more than that. So make sure you take advantage of this free 7-day trial that is a pinned comment, and enjoy. Now that I've had some time to digest the earnings and everything like that, okay? So first thing is the company went down so much that now it's trading less than the revenue for the company, right? But the way a lot of investors look at this right now is they say, well, the company's losing massive amounts of money. So, yeah, sure, it's trading less than the revenue is for the company, but at the same time, they're losing so much. So a lot of people don't want to take that risk, right? Obviously, this was a capitulation type day in the chef. I mean, we saw it play out, right? Almost 5 million shares traded hands, 775,000 is a normal amount that trades on an average day for the chef. So just pure capitulation. And, after coming in with that dumpster fire, you can understand it. I think as far as the stock price goes for, let's call it, in my opinion, like until next earnings, it's probably going to be in the $2 to $3 range unless they have some sort of major positive development. Like let's say another food company makes a major investment in them or something like that. If we don't get any big news between now and the next earnings in 3 months, it's going to sit in the $2 to $3 range. And that's just kind of what plays out there. I don't want to say everybody that wanted to sell out of the chef has sold out, but I think most people, now people are just looking at the chef as like it's a 0 to 0 situation now, where it's either, riding the train all the way or, either way in that situation, it's either the Titanic or we're going to float and we're going to make it to the other side. And unfortunately, we don't know as of right now. We have to just wait until the coming quarter's numbers. So I think that's kind of what's going to transpire in that. I think it's just going to be stuck at this 2 to 3 range, kind of like, Oatly and Honest have been here for a bit, right? So that's kind of my 2 cents there. Now, the commodities, I think this is important. Everybody wants to know what's happening with inflation, where numbers are going to go. I think it's important to pull up a lot of the major commodities. And this is just a 6-month chart for these major commodities, okay? Copper's down almost 9%. Corn's down 17%. Natural gas is down 24%. WTI is down 24%. Wheat's down 34%. Oats are down almost 38% for oats. Lumber's down 44%. So, I think this matters in a significant way if you're thinking about where inflation's going, where inflation numbers are going, because all these commodities have continued to just get worse and worse and worse, and the prices continue to come down in this situation. Obviously, the more fears about the macroeconomic landscape in 2023 is also going to potentially hurt commodities more. The dollar potentially going down could also hurt some of these commodities as well. It depends on which ones. So I mean, at the end of the day, this is good news. This is good news for the market. I would love to see commodities continue to go down. Like if I had to choose commodities up or commodities down the next 6 months, commodities down, absolutely. Because eventually we're going to obliterate these inflation numbers. It takes a little bit of time, man. It takes a little bit of time. Tesla might also down another, almost 4% here today. By the way, I almost had a heart attack because I logged on CNBC this morning while I was still up. It was like, I don't know, 6 a.m. or 7 a.m. And it said, I thought it said Tesla shares plunged 15%. I was like, what? I can't deal with this and the chef in the same day. I can't deal with this. It's too much, okay? Too much. But it said Target shares plunged 15%. So, okay. But nonetheless, Tesla continues to get hit. Down almost 4% here today. Stock's down over 53% year to date. I've spoken obviously several times about my worries in terms of Tesla, and as a big Tesla shareholder, I've spoken many times about my worries about numbers for the company in 2023, and especially if the economy gets far worse, okay? But something I've never talked about with Tesla, and I just think this is worth mentioning, is Tesla is a stock that attracts a lot of folks that like to play on the riskier side, meaning go all in Tesla stock, sometimes go all in options, sometimes margin out money to go into Tesla, okay? It definitely attracts, including we have, some of the biggest creators on the platform are open and share that they're basically all in Tesla, right? They've done that over the past year. I'm thinking about Steven, I'm thinking about Chicken, I'm thinking about Kevin, so I do wonder if Tesla stock continues to get hammered. I do wonder if there's going to be some sort of contagion where people just continue to sell off the stock, and especially if numbers start to come in bad or something like that. And the thing I'm concerned about is Wall Street really controls that stock now. Retail does not control that stock, but retail obviously has gone extremely heavy into Tesla over the past 1 to 2 years. So I'm very concerned about if numbers aren't quite there in 2023, the stock tanks more than it already has, and a lot of people are all in, margined out. I just wonder if that could create like some sort of contagion problem there that, it takes Tesla down a lot more. It also takes other stocks down as well. So it is one of my concerns I have, and I've never really spoken about that. But I think it's definitely something to factor in, because a lot of people, they go all, it's one of those stocks that people, because a lot of folks like myself made so much money in Tesla stock that a lot of people just assumed it would go up forever and ever and ever, and they pile in, go all in the stock. And it's just like, one thing with me, I diversify my money around. It sucks if I'll go big in a stock, but at the end of the day, I'm never risking the farm. And a lot of people have, gone basically all in the stock the last year or two, and it's obviously in a tough place. And we'll see what happens with the numbers. The crazy thing is, the stock price in a tough place. It's down 53% year to date, and Tesla's numbers have been amazing in 2022. The real question is, if Tesla numbers aren't amazing in 2023, then what happens with the stock price? I think that's the important thing to factor in there, right? Coinbase. So Coinbase is down 80% so far year to date. A lot of people look at Coinbase, and it was down another 12% here today, and they say, okay, with obviously almost all their competition being eliminated because they went under, right? And we'll see what happens with Crypto.com. We'll see what happens with Binance there. We'll see what happens with those. But people are looking at this and are like, okay, so there's only really one major game in town, especially if those guys go under, and that would be Coinbase. And so logically, a lot of people are looking at that. They're saying $11 billion market cap. They're saying, lack of competition, maybe potentially moving forward, right? And they're saying it's a public company. There's, at the end of the day, you could say they might play safer than anybody in the space, but at the same exact time, Voyager was a public company as well, and they still went under, so it doesn't mean Coinbase can't go under, right? Now, in relation to Coinbase, here's the issue. I understand the valuation is down to $11 billion market cap, and I understand it's not much competition, but I think there are some things to at least factor in here at Coinbase, okay? First thing is they're losing massive quantities of money at this point in time, and that's probably going to continue like that for a while, until crypto goes on some bull cycle again, which is we don't know when that could be. Maybe it's 2023. Maybe it's not till 2024, 2025, 2026. And someday, I'm sure, crypto in general is going to have a bull run again. But it's not today. I can tell you that much. Okay. If anything, things are likely to get uglier in that space than good. Right. Revenue missed massively in their last quarter as well. Revenue plummeted more than 50% year over year. So everything's getting far worse for this company. Their user base is also shrinking. Now, it might go up because of all the other failures in the space, and so maybe some folks move to Coinbase, but at the end of the day, like, Coinbase has been losing users, not nearly as bad as Robinhood, but still they've been losing users. And also, I mean, their income statement has went from great to awful. As simple as that. In a pretty short amount of time. It's happened in quarters. I mean, so you look at this. Q3 2021, $406 million in net income, $840 million in net income, almost $1 billion in Q4 2021. Then next thing you know, all of a sudden they're losing money hand over fist, $430 million loss, $1 billion plus loss. And in this past quarter, over a $500 million loss. So they're losing massive quantities of money. But not only that, you look at cash and cash equivalents. Cash and cash equivalents peaked in Q4 at over $7 billion. And now at this point in time, it's down to $5 billion. So you got to say, okay, if this company keeps losing money, are they going to go down to 3 and 2 and 1? And that's where you start to get into some of these worries. And it's like, what's their exposure to some sort of riskier assets, if there is any exposure? And that's where things can sometimes become a little clouded, right? And so, that's a tough thing with a Coinbase. It looks kind of attractive, but at the same time, you're kind of looking at it and like, am I really going to buy into another, massive money-losing company that their balance sheet's getting far and far worse? So, that's what I'll say about that one. It's kind of a little cautionary, okay? Now, Fed. So, Fed. I don't know if you guys saw. Fed Waller says he's open to a half-point rate hike in December meeting. Now, I thought this was very important. Very important. Now, he also says, I don't want to be making any judgments until I see more data, which there's not going to be that much more data before now and then. But anyways, I thought this was important because it shows that the Fed is ready to stop raising 75 basis points, and they're ready to start slowing the rate of increase when it comes to, raising rates. So seeing Waller make that comment today makes me definitely feel like the Fed's going to go with 50 basis points in December rather than 75 basis points. It's not for sure, but I would say it's much more likely. If he did not say that, I would still kind of be like in a 50-50 state. Now I would say there's probably about a 75% chance that they're going to go 50 basis points, which is something the market looks at for some relief, because they're like, okay, we were going 75 basis points time and time again. Now we're going 50 basis points, then maybe at 25 basis points, and then maybe they're done. And so I think that's the way a lot of folks are looking at it from the Wall Street side, and definitely something that makes folks a little excited in the market, right? Now, Daly came out and she basically said, a pause is off the table. And it's not the great thing to hear, but at the same time, I don't think anybody was expecting a pause right now. I think people are all expecting a pause in likely the first quarter of 2023, or at the latest, the second quarter of 2023. But I think really first quarter of 2023, that's when they're expecting a pause. So the fact that Daly comes out in November right now and says, hey, you know what, we're not pausing anytime soon, that's off the table. I don't think it really creates a dilemma for anybody in the market, because I don't think anybody was expecting a pause right now, to be honest. That would have been shocking. Like if the Fed didn't raise rates in December, I mean, the market would skyrocket, literally skyrocket, and that would shock everybody. That's not happening. So her comments there, I just thought those were kind of like, kind of not much going on there, okay? Now, Nvidia came out with earnings after the bell, and basically a lot of misses, to be honest. EPS missed. Revenue did slightly beat there. Gross margins was down huge. They also said they expect about $6 billion in sales, which was lower than estimates by analysts. So, when it comes to Nvidia, you would assume the stock has to be down, but here's the truth. The stock's up after hours. And, at the end of the day, when it comes to Nvidia, just think about this, okay? Everybody wants to hold Nvidia stock. Everybody wants to own that stock, okay? And so at the end of the day, Nvidia is a stock that has been devastated this year. I know it's come back a lot over the past 4 or 5 weeks, but at the end of the day, it's still down massively. Wall Street loves Nvidia stock. They want to be Nvidia stock. They will make any excuse, even if it's like, well, numbers weren't quite as bad. They want to get back in that baby. They're addicted to that stock, okay? That's just a bottom line there. It's a great company doing amazing things, and Wall Street can't get enough of it. And so even if they come in with this miss, that miss, this miss, at the end of the day, they want to get back in that baby, man. They just can't wait. Now, in terms of the rally, today obviously was not a good day in the market, I think, for countless stocks. In terms of the rally going on, is it going to start back up? I think Wall Street is going to be ready to get the rally back going again. I think at the end of the day, they're going to have, the market never goes up day after day after day. But at the same time, you kind of look at the market and it just feels like, it almost feels like every fall is just going to go higher, at least for the next month or two. It's just they want rally mode, it seems like, from the Wall Street side. And you can even see it with price action in a stock like Nvidia after hours, after several misses and some pretty big misses on a percentage basis. At the end of the day, they're kind of looking past that. And they're like, rally on, baby. Yeah, we'll go down one day, but we're rallying on this baby into year end. We need those year end bonuses. And that's what it kind of it feels like that in the market. I will say that as far as kind of the rally and those sorts of things. So hope you guys enjoyed today's video. As always, don't forget to check out Ticker Buddy. That will be the pinned comment down there, and surf around that, create an account. And it's pretty darn amazing to check that out, type in some of your ticker symbols, and do some in-depth research on Ticker Buddy. Appreciate everybody for joining me as always. Thanks for being subscribed, and have a great day.